right. Okay, again, welcome everybody. So I know, because this is a recording, want to make sure we welcome everybody to the call. We got a couple of guests on the line tonight. Aisha, let me hear you say, hey, one more again. If you're still there, while she's looking for the.
Hey.
All right, what's up? I know you're working right now, so yeah, I know you're still working, so keep that attentive ear while you can, and then chime in whenever you get a chance. So thank you so much for being on the call. Miss Moore, how you doing?
Very good. Glad to be here.
Excellent. I'm very excited for you being there. So you have an idea of who's on the call tonight. Linda Kenyon, she's out of Houston, Texas, and she's got a few of her teammates with her, Alicia, Azar, and Tawana. All superstar young ladies, and I'm looking forward to the both of you meeting pretty soon, preferably next month at our convention, but we'll talk about that shortly. Again, we're going to be going over living benefits tonight and why living benefits are so important, particularly for the communities that are underserved. And I consider myself someone excited about being able to share this information because of what it means to me and my family. So to get started, we have a mission, and Miss Moore, Miss Aisha, you all know that I consider this my ministry. This is an opportunity for me to be able to share this information with many families who did not have this information. And one of the reasons why I get so excited about census is because a lot of what census is doing is right in alignment with what I'm trying to do. And their mission right now for the year 2025 is their mission 10,000, where they want to be able to reach 10,000 families and bring this information to them so they can also get themselves in a better financial situation and secure a legacy for their descendants, their grandchildren and great grandchildren, and so on and so forth from there. So a little bit about who we are, we do, if I can get this thing to move. Okay, so who we are. A financial services marketing organization contract with many of the world's leading financial services companies. What's great about that is whenever you have multiple companies that you can work with, you have the opportunity to make sure that you have a specific product available for every client that you have, because no client has the same situation as any other client. Right. So if you only have one location to shop from, it kind of limits your opportunity to be able to have the right thing for each of your clients. So being able to work with some of the leading financial institutions gives us a chance to really service our clients and make sure that they have what it is they're looking for. So our mission is to educate 10,000 families and connect them all with those financial institutions. Welcome to the call, iPhone. What's your name, iPhone? iPhone's working on the mute button. Well, Linda, go ahead and find out who that is for me when you get a chance. And we want to make sure we build, protect, and preserve our wealth. Now, you understand the wealth gap in this country is pretty huge, and it continues to expand because a lot of the information that we need to be able to secure our financial future is not readily available. We covered that in our last discussion. So this, for me, is a crusade, and it's right in alignment with Census Crusade to be able to help more families get this information. Why? What are the most important things to you in your life? So you can talk about the main assets in your life: your family, your health, your job, your money, your home, right? And when it comes to that, what we do to protect these things, you kind of care about that, right? It's an opportunity for you to make sure that you have what is available for your children, your grandchildren, yourself, be able to live comfortably in your retirement without having to worry about losing any of your money. And if you don't have the protections in place, you can lose it all. So what do? Right? So the discussion that we're going to be having tonight is how you can have a particular type of an illness and still be protected financially from any financial ramifications, because really we all just one critical illness away from losing it all. And I can honestly tell you, the team knows about this, but for our guests, I'm a spiritual man. I might be loud and obnoxious, but I really believe in the Lord, and I believe in how important God is in our community. And my pastor's son actually passed recently. We just had his funeral a couple of Fridays ago, and the man has a sermon on one Sunday. He goes to play golf on that Friday, and he's with God that Saturday. And what's so strange about that is he's playing golf, everything is going well. He has no signs of any medical issues. He has shortness of breath. He decides he's going to take himself to the hospital. They said, go ahead and take yourself to the hospital. He figured he was well enough to take himself to the hospital. He gets to the hospital and he finds out that he has a blood clot in his lungs. They identify it. They got him settled. They got him, what's the word I'm looking for? Stable, right? And everything was supposed to be okay. He calls my pastor, he calls his sister and the family, and everybody gets there. And while my pastor is praying over him, everything seemed fine. And then the very next morning, I get a phone call that he was no longer with us. So it can really happen in a blink of an eye. And thankfully that he was already financially prepared, right? Because he had these living benefits in place to make sure his family was secure. But what happened, what happens if he didn't? What happens if the primary breadwinner expires and you don't have the financial security to be able to secure your family? They have to mourn, but they also have to deal with the financial ramifications. The people that are left behind still have to deal with the cost of living, keeping a roof over their head, clothes on their back, food in their bellies, being able to pay for education, right? These are the things that we still must do. And if we want to make sure we secure our families financially, we have to pay attention to the possibility that God can call us home at any time. So we want to talk about how we're going to help, right? So we want to talk about living benefits and a death benefit. That's going to be the protection. Now, the reason why we do this education, the education is vital because a lot of times, even though this financial pyramid that you see at the foundation, you see protection, you see savings, and you see investments, a lot of people are being taught this upside down, right? And because of the lack of our education, I got somebody with their, who's that? I think I might just mute you out there. All right, so a lot of people they have this upside down. They think they're supposed to start investing first, but if you don't have the money to lose, then you should not be using that money for any form of investments. But the way that they teach us, whether it be the media, news media particularly, or even the banks where we put our money, they want us to use our money to help them use our money so they can invest and make money off of our ignorance. Right, but the truth is, what should be first is making sure you secure yourself financially. And I got to admit, it makes sense. But even I didn't learn about this until I was 48. Right, so you can imagine someone that's been making six figures since he left the Air Force back in 1997. So that's a lot of years for me to be constantly paying into a system where I did not learn how to protect my money. So I suffered a lot of losses, right? So we definitely want to be able to have those financial protections. And by the grace of God, I remained healthy most of my life. But what would have happened if I would have lost my job and gotten sick and not being able to produce any money again? So we want to make sure we start teaching people properly so they can understand the importance of having a death benefit to protect them after they expire, protecting their family, but also being able to take advantage of the money that's available if they were to have a qualifying illness while they're still alive. And of course, we want to talk about the savings and the tax savings, as well as being able to invest once you have the money and everything set up prior to that. So, hey, Pastor, I see another pastor reaching out to me right now. So this is some information about the Wall Street Journal, from the Wall Street Journal, talking about how Census and IMO, an independent marketing organization. Somebody had a question? I got iPhone with a question. Yes, ma'am. Okay. All right. So, of course, this is not just a presentation. If you have a question, feel free to interrupt me because I talk fast. It's like playing double dutch when you listen to me do a presentation. You got to know when to jump in, right? So time it well, time it well. So again, with the Wall Street Journal, F&G is a company. It's a financial institution, a very large one, about $50 billion in assets. And just in the past couple of years, they purchased 49% stake in the company. Our company is named Census, which is an independent marketing organization where we market, all those different financial companies and being able to put that information out to our potential clients, potential partners, and help them become a part of our organization. So when you think about what this article is saying, I like this one caption here: validates diversification strategy to expand own distribution while boosting presence in underserved markets. What I love about F&G in particular when you think about a lot of the larger financial organizations, their focus is on just families that are doing better than maybe $500,000 or more, right? Well, if you look at the bulk of the middle class, not the bulk of the middle class is barely saving more than $40,000 in their lifetime, right? So a lot of the people that are out there looking for solutions, they're like you and I. They might not have $500,000 just sitting around somewhere. F&G identified this and said, hey, you know what? They deserve to have the same opportunities as all the rich people who have more than $500,000. So they decided, hey, let's take a look at Census, because Census is doing some great stuff. They're actually partnering with a lot of people who want to be able to have access to the same information and the same opportunities as a lot of these rich people. And because of that, their market share has gone through the roof. And right now, Census is doing really well with F&G backing us up. And we're actually talking about doing some great things over the next couple of years, including going public. So this is an opportunity for you to take a look at that as well. So Bloomberg had a similar article that talked about F&G purchase. Can you state your name, please? Yes, my name is Tony Warfield. Thank you so much for being on the line. All right. And oh, did you say? Oh, you sent that to her?
Yes.
Oh, I'm sorry. You know, I just saw the question.
Yes.
You know, I told you I answer all questions.
Yes.
I answer all questions. I ain't playing.
Right. Excuse me. iPhone,
right.
Can you state your name, please? iPhone, you've joined the call.
Well, that might be my cousin Tasha. If that is, just say hi.
Hi, Tasha. Is that you?
It might not. It's okay. We'll just go ahead and move on, and we'll find out who it is once we get done. All right. So,
Okay.
you know, Bloomberg has a similar article as Wall Street Journal talking about how awesome it is for F&G to purchase us. And right now, F&G is talking about, you know, purchasing the rest of it. That's Pastor Jay. Thank you much, Pastor Jay, for joining us. Right now, I know she's currently tending a family member in a hospital right now, so I appreciate you jumping on. So let's move on to the next part of this presentation. All right, so these are some of the financial organizations. Many of these organizations you might recognize. Of course, F&G right there in the middle. But you have American National Emeritus, Lafayette, North American, which I just got pointed with again, Mutual Omaha, Principal. Principal Life is really, really good for some of those group policies that you might be able to start offering people. We don't offer group life through Census, but Principal is really, really good for that. United Home Life, for people that are a little bit over 50 and above. And of course, AIG, which has some fantastic signature guaranteed universal life products, as well as universal life products. So we have enough people, over a couple of dozen different financial institutions, to be able to match that financial institution to your personal needs. And that's important because as professionals, we do have a fiduciary responsibility to make sure that we get our clients the best thing that's available out there that will benefit them, not just us. Right. And of course, if you're benefiting your client, ultimately, that's going to benefit the agent as well. So I'm pretty excited about that. So what we're protecting against, right? We're protecting against the what ifs, right? So when you prepare with living benefits, whether it be a chronic illness, critical or terminal illness, you want to start talking about some of these leading causes of bankruptcy as well, right? So, you know, I had a chance to talk with a couple of people about some of their financial challenges over the past few years. And many of them, they ran into these financial challenges, not because they weren't working, they're working full-time job, right? Not because they didn't have a 401k or some kind of retirement plan. What ends up happening is they don't have a sufficient medical insurance plan. And because they don't have a sufficient medical insurance plan, a lot of those medical bills ends up eating up a lot of the money that they have saved. And one of the things about medical insurance that they don't tell you, even though you are aware of it, you don't really think about it until after the fact. Medical insurance covers medical expenses, right? Medical expenses in terms of what the hospital or your doctor is charging you. It doesn't pay for your inability to work during the time that you're ill, whether it be for surgery, whether it be for a particular illness. If you are not able to work, your medical insurance is not paying you the money while you are not working. So a lot of times what ends up happening is you're using or consuming monies from various sources, whether it be your retirement funding, your savings, borrowing money. But at some point, you end up drying up those sources, and then what ends up happening is you start getting later and later on your payments to stuff that's important, and next thing you know, you end up having to file for a bankruptcy, right? Whether it be a Chapter 7 or Chapter 13. So you see over here the 42%, where recent studies have indicated that 40% of all personal bankruptcies are a result of medical expenses. The study also revealed that 78% of them had insurance. Now you can see the results of all these other ones. 22%, millions of Americans are unemployed, which makes them much more likely to file for bankruptcy. Unemployed individuals often pay for insurance out of pocket. And you might have heard me say this before, and I'll say it again. If you can't afford insurance, you can't afford not to. And this is why, right? When you have a situation where, say, someone has a tumor. It doesn't matter what the tumor is. It might be operable. It might not be. It might be inoperable. But whatever it costs, if you don't have enough money to pay for the premiums to take care of the surgery is going to be far more expensive, which is going to force you into a bankrupt situation. And then what ends up happening is when you have that bankruptcy, it makes it more difficult for you to apply for other things later on in life, whether it be for a new house, a new car, or I'm sorry to say, even another job. You know, your credit and bankruptcy can affect your ability to get new employment. And it's so funny because it's a catch-22, right? You need to get the employment to be able to pay off the bankruptcy or be able to pay the bills. But because the credit was destroyed by some bankruptcy, and the bankruptcy was a result of you not being able to cover your bills, and the bills were the result of you not having the insurance to be able to take care of that. It ends up being a vicious domino effect that's hard for you to get out from under. So, you know, these causes of bankruptcy can be prevented if you do the planning prior to that. So preparing for an unprepared event is saving someone's life. You don't imagine how much it would mean to you until it happens to you. That's facts, right? So we look at preparing for, you know, the critical, chronic, and terminal illness, right? Protection is peace of mind. I can honestly tell you this is true because I remember, you know, back in 2001 to the dot-com crash, losing all that money, losing a lot of money again in 2008. What terrified me was not my health. What terrified me was not being able to leave a legacy for my children, right? So when I finally learned about life insurance and how life insurance can protect my family's wealth, that was a big deal. And then when I learned about living benefits, I got super excited because it meant that I will still be able to take care of my family, even if I were to suffer some kind of an illness. And it's that protection and peace of mind when I needed it most, right? And I needed the peace of mind because it encouraged me to continue to move forward. So we want to talk about how that looks, right? Let's talk about chronic illness. So a lot of us, we might have seen some family members, friends who might struggle feeding themselves, bathing, dressing, transferring, toileting, or walking around, right? Well, if you can't do this, right, you can understand that you cannot work. And if you cannot work, then a lot of the money that you would have been making, especially if you're an hourly employee, is not being produced. And that's what's causing some of these biggest bankruptcies that you're seeing right now. So you're talking about 80% had health insurance. So being able, if you have a chronic illness, if you don't have the ability to do 2 out of your 6 activities of daily living for 90 days or more, imagine your life insurance policy actually paying you while you're still alive. That's huge, right? So we could talk about a critical illness where 1 in 2 men and 1 in 3 women will contract some form of cancer. And I question that statistic because I'm a family of 4, you know, me, my mother, my sister, my brother, and myself. I'm the only one in my family who did not contract some form of cancer, right? So this statistic might be accurate overall, but you're talking about 3 out of 4 people in my case, right? So every 44 seconds, someone in the United States dies of a heart attack or has a heart attack, right? Now, you know, what's so good about today's medicine is many of the people who have those heart attacks, if you get it early enough, they can recover, but there definitely has to be lifestyle changes, right? So approximately 70% of people over the age of 65 will require long-term care. Now, many of you know that many of the baby boomers and for the next 5 or 6 years are going to continue to be retiring. And what's so interesting about that is the more of these people that are retiring, it is going to put a strain on the social safety net because they're going to need more social security. They're going to need more long-term care, and you're going to have less and less people working in the workforce, which means more and more people are going to be required to assist those people. So that can definitely affect the financial situation of this country, and it's happening right before our eyes, right? So you're going to need more nurses. You're going to need more doctors. You're going to need more medical professionals, which means it's going to cost more. And if it costs more, that means there's going to be a lot more bankruptcies if people are not prepared for that. So if you have a critical illness, whether it be a heart attack, renal failure, stroke, you definitely want to be able to have the monies available through your living benefits to be able to protect you and your family's financial future. So we want to look at what some of that looks like. So the presence of an illness or condition of life expectancy of 12, 18, or 24 months. It's usually about 12 months. And a chronic illness is the inability to perform at least 2 activities of daily living for 90 days, as I shared earlier, or the presence of a severe cognitive impairment, dementia, or Alzheimer's, right? So you're talking about dressing, eating, bathing, toileting, transferring, or incontinence, right? So if you can't go to the bathroom, you can't get out of bed and get in a chair, you can't feed yourself, bathe yourself, you can't do that for 90 days, depending on the severity of your illness, they got to cut you a check so you can be able to sustain yourself until you recover. And of course, there's a critical illness where the diagnosis of any of the following illnesses, invasive metastatic cancer, stroke, major heart attack, end-stage renal failure, that's what my mother passed from, major organ transplant, we have people on the team that suffered that, amyotrophic lateral sclerosis, blindness due to diabetes. You have the Asian community and the Black community that's filled with people with diabetes. That's a big deal. Paralysis of 2 or more limbs, major burns, coma, aplastic anemia, benign brain tumor, aortic aneurysm, heart valve replacement. I actually have a good friend of mine who just had that. Actually, she had the heart valve placement first. It failed, and she had to have an entire heart transplant after that, right? And then coronary artery bypass graft surgery. These are some pretty severe illnesses. And you can imagine you're going to be down for a while if you were to incur those, right? So you definitely want to be able to have the financial protections in place. So 40% of new cancer patients lose their life savings. 62% of cancer patients report being in debt due to their treatment. 55% of them accrue at least $10,000 in debt. That's not including, maxing out your credit cards and possibly losing your house, while 3% file for bankruptcy, right? Cancer costs exceed $80 billion in America each year. Now, if you've heard any of my previous presentations, the United States doesn't have a healthcare system. It has a health management system. There's a significant difference, right? They're not really trying to cure you in this country. And that's true because look at how unhealthy the foods that we have. The same foods everywhere else have far more harmful ingredients that force us to depend on pharmaceuticals to sustain ourselves. And what's the problem with that is those pharmaceuticals have side effects that are affected or exacerbated by other pharmaceuticals with side effects. So that continues to make us unhealthy. So we got to put ourselves in a position where we can, take care of ourselves. So if we're living Friday to Friday, paycheck to paycheck, you can understand why we end up being in a financial situation in this country in the first place, right? So I want to talk about a case study, right? We got a client, 40. He got his policy, $300,000 back in 2015. Chef, 3 years later, ends up with colon cancer. And he ends up, because of the severity of it, they gave him a 74% payout of his $300,000. So with his permission, he went ahead and let us take a look at him. This is him right here. And his wife, the happy face, blots him out. But this is what his check looks like. Now, one of the things about showing you this check is not to impress you, but to impress upon you that, hey, if you have the living benefits and you have a qualifying illness, you will be paid, right? Now, there's a lot of misconceptions on when that will be. Some insurance companies, they have a 2-year moratorium. If you have a specific type of illness, maybe it's a little bit longer. But with us and the people that we work with, the bottom line is if you pay your premium, you're insured. Your policy's enforced. And if you were to get an illness as soon as you've seen here, 3 years later, this gentleman gets a payout of 74% of his $300,000. But we have somebody that's a little bit more near and dear to our heart. Back in October of 2015, he gets a policy right? And then 6 months later, he's diagnosed with prostate cancer and he gets a 50% payout. What I want you to pay attention what I want you to pay attention to is less than a year after he gets his policy, he's already getting a payout because he gets diagnosed. Well, did he know he had prostate cancer? We didn't know when he contracted it. His PSA, the PSA is the measurement to determine if you have the hormones that suggest that you might have prostate cancer. He didn't have it at the time that he got his policy, but he contracted it and he ended up getting a payout for his prostate cancer, which is great because while he was ill, he could not work. So you can imagine if he could not work, what would have happened to his house? What would have happened to his ability to take care of himself? So this was a blessing to be able to get that payout. And this is him right now with our illustrious Cheryl Baylark. That's her brother. And, this guy is very pleased. But, one of the parts of the stories that she shares with us that I really appreciate is he actually got this policy just to shut her up. Right? Okay, sister, I'll do this for you. I'll get this policy. And right when he gets diagnosed with prostate cancer, you know what he says? I wish I would have listened to you and got more coverage because he could have afforded more coverage, right? And if he would have got a larger payout, he might have been able to use whatever money was left over to start a business or do something else with the money that it could have been something a little bit more profitable for his future, maybe even augment his retirement and still be able to have the remaining portion of his death benefit to protect him if there would be a recurrence of his illness. So we can look at another case study where this guy, male, $100,000 payout musician, he gets it in 2016, 2020, he has prostate cancer as well. Now, I'm the only male on this call, but I want y'all to know how important it is to understand that men over 40 and 45, we're very concerned about prostate cancer. So when you're, for the agents on the line right now, because of the foods that we eat and the lifestyle that we have, men must understand the likelihood of you getting prostate cancer after 45 is kind of high, right? And if you have a history where you have more estrogen production in your diet from the foods that you eat, that can also exacerbate the possibility of you getting prostate cancer. So it's very important for you to be able to share that information with your potential clients. So this is him right now, got a check for $66,000. Michael forgot he had living benefits. So someone actually had to call him because he ran into a financial situation and he didn't know what to do. It's like, man, what am I supposed to do? It's like, oh, did you check your policy for a potential payout? He's like, oh, I can do that? Yeah. So next thing you know, he goes ahead and puts in a claim. They give him a $66,000 check that bails him out financially. And by the grace of God, he recovered and still has some money left over. So I think that's great, right? So this presentation is pretty fast. So the next thing you know, what do I do next, right? You want to contact the person who invited you and set up a one-on-one meeting to join our mission. And how you join our mission is pretty much up to you. I don't believe in pressure. You take a look at what we're doing, sit down and, view some of our presentations. In fact, we got a really, really great presentation tonight where we're going to be talking about how the company is going to be going public in a couple of years. And, a lot of the people that we get a chance to work with, thank you for that, by the way. A lot of people that we get a chance to work with, you're going to be working with people from a multitude of backgrounds. I get really excited about the fact that I'm former military and I get to work with politicians. I get to work with teachers. I get to work with law enforcement. I get to work with flight attendants. I get to work with what was Miss Baylark? She's a church administrator. I get to work with pastors. I can work with anybody as long as they want to work, want to get out there and make some changes, right? So, Aisha, you're a guest on the line. Miss Tammy Moore, you're a guest on the line. While we got you on, did you have any questions? Now, before you ask your questions, I want to let you know that these young ladies on the line are pretty fired up. They're still working, but that's okay. You can still ask them a question. You might talk about Alicia's paintings on her wall over there because I like to tease her about those that kissy face up there at the top center of it because I really like that. And I happen to be a fan of orchids, so I really like her decorations. That's some really, really cool stuff. So Miss Tammy, Miss Alicia, did you have any questions? Aisha, I'm sorry. Did you have any questions? You're talking, but I got to get you to unmute first, Miss Moore.
Sorry about that. I
all.
don't have any questions at this time. The information is, I was kind of, I was familiar with the, how should I put, I've heard the information before, but of course it was years ago. So this is kind of a refresher for me. And
Mhm.
I've recognized how important each of those topics are. So yeah, it's nice to hear the information again as a reminder. But yeah, I've always believed that insurance is important.
Have you have you been in a situation where someone who understood the importance of insurance, but they didn't really want to move forward with it and got themselves in a situation because they didn't move forward? Has that ever happened to you? Or
Um,
have you seen that?
it's it's one of those back in the day when I was involved with insurance. As I mentioned to you before, it I was dealing with people who, like myself, came up at a time where finances really weren't a part of your learning. There was no one there to teach you that you can use insurance, to other than, oh, it's like get insurance because if you die, then you can leave your family some money, and that was pretty much it. So when you talk to
Right.
people who don't really have that the background where it's enforced to how to protect your money and all of that, most of these people were, well, you get your paycheck and you try and put some money aside if you can, but you really don't. So it was a struggle to get them to get beyond the habit of just getting your paycheck, putting in the bank, and you save a couple of dollars here and you put your coin, you collect your coin in the jar, and then eventually, so the mindset was different. I think I would like to think that today people are a lot more wise and open to it, but I did have
Mhm.
difficulty getting people to understand that, and they just didn't believe me. They just didn't believe that you could possibly advance your finances through insurance. It just seemed like, yeah, yeah, you just want me to sign up and so you can get your commission, sort of thing. So I struggled with that a little bit. Um, but there were people who were interested but didn't feel like they had the finances to invest in it. So that was a challenge.
Another question, if you don't mind, I appreciate you sharing that. Do you think that you would have had a more favorable reaction had they had some form of financial education?
Absolutely. Absolutely. Because the thing that seemed to, I think I mentioned to you before, I was speaking with a group of ladies who were interested in the information that I was sharing. And after covering it, the one woman was like, oh, yeah, I definitely want to sign up for it because I have to buy a car in a couple of months. So it was kind of, they got they were excited about the money. They just didn't understand that, okay, wait, this isn't something that happens overnight. This is something you invest in long term. If you have a mindset of, okay, well, I just won't go shopping for a couple of weeks or a few weeks or, for a short period of time, and then I'll build up this wealth. It was just a different mindset that was not resonating with the group that I was dealing with or with that particular person.
May I ask you a question? How long ago did you have your license?
Oh, it's been a minute. I started in 2008, and then
Okay.
it, I don't remember the exact date when it expired, but I didn't renew it because I had moved on to something else.
Okay. That makes sense. I really appreciate you sharing that because one of the things that when I got out of the military, I didn't know about any of this stuff. I had clue, I had no clue, right? And with as much as I learned about how to make the money, protecting it was never something even though my mother was really into life insurance, she was always about those final expense life insurance, or I would say the burial plans, right? And you might remember, the insurance agent that used to come over to your house and collect your $12.37 or $35.50 for that little small policy. And that same person has been coming to your house for 30 years. You didn't pay that policy off 2 or 3 times over, but they're still collecting that same premium, right? And I'm like,
Yeah.
I had to ask my mother, at some point you have to have paid this off, right? And she said, I don't know, son, but he just keeps coming, just collecting the money. And and that's what people see, And so the people like me that watches our mother or our grandmother pay these payments is like, that's what this is. So when people, talk about becoming an agent, that's what they remember. It's like a vacuum salesman, right? Well, there's a lot of stuff that's changed.
Or the stories about how the parent sends the kid to the door to say, Mama says she's not here.
I've never done that. Yeah, I have many, many times. You did wait a minute. Were you the child that had to say that your mom wasn't there, or were you the one telling your child to say that?
No, my
the truth comes out.
Yeah. Well, I was young and I was nervous about talking to this adult, this strange person at the door. And so when she said, just tell him I'm not here, I wasn't thinking. I was a kid, and it was like, Mama says she's not here. But as an adult, later on, I heard from other agents the same story where the parents send the young kid to the door, and, they're a kid. So.
Well, thank God for Zoom, right? All you have to do is just hang up. There's nothing wrong with that. I appreciate you sharing. Miss Aisha, did you have any comments you wanted to share before we move forward? You said I think I read something somewhere where you said that you had nothing at this time. Let me check the chat pod. Pastor Jay, hey, Pastor Josie, she jumped off. Not at the moment. Okay, so that's good. So again, I really appreciate you both for being on. Thank you so much for the agents supporting me. This is an opportunity for me to get stronger. Now that I'm starting to do more of these presentations on Zoom, I'm so used to doing all my presentations in person, but we be able to cover more people each week by being able to do more Zoom presentations and getting people to show up for some of the local events. So as usual, what I like to do is I like to recommend a book. So we got a chance to talk about last week's recommendation, which was Fruit from the Poisonous Tree. I actually haven't got a chance to start reading this yet. Can y'all see that? Fruit from the Poisonous Tree? Because I just got it delivered. And unfortunately, I ordered it from Amazon before I heard about the boycott. So I'm sorry about purchasing this from Amazon because they're not participating in the DEI program. But I still love my book, so I'm going to keep it. The other book that I planned on reading again, I just started reading this again, is The Parable of the Pipeline. Y'all see that right there? Parable of the Pipeline. This is what our senior executive vice chair recommended that we read again. If we have not read it at all. This is a very important book because you want to be able to understand how to create your multiple streams of income by having multiple pipelines. So we want to talk about that. And don't worry, there's no test, there's no book report that I'm going to make everybody do. Yeah. So did any of the agents have any questions? Azar, wait a minute, I just saw Azar. Hey. Are you on?
Hello.
What's up? I like to pick on you. How you doing?
I'm pretty good.
How come I don't see your face? I just see Azure.
That's all you really want to see right now.
That's all I want to see right now. I can't see anything. You see these glasses? I can kill ants with these things with the solar radiation. I'm Urkel today.
Okay.
But that's all right. I'm glad to have you on. I didn't get a chance to pick on you last week, so I'm just going to have to double up this week. Is that okay?
What last week?
You weren't here. We didn't see you last week.
What day?
But you're already. You had already scheduled I think it was yoga or Zumba or something. She's an athlete, Charles. She's like an Olympic medalist.
I thought it was when you had STEM, maybe.
Yeah, I think I had STEM that night or something.
Yeah.
Oh, that's okay. That's all right. We appreciate what is the STEM for the kids like or stem cell research? Which one is
No,
it?
it's like a STEM for the kids, for science, like
Okay,
kind of like
so
a
if you're doing
science
something for
fair.
the children, I know STEM I forget what it stands for, right? What does it stand for again, STEM?
I forgot.
I thought it
Oh,
was
how you the mathematician and don't forget? Oh man, we gonna pick on you
Because
too
that
much.
that that
All right, so
that deals with science, not math.
yeah.
It's science, not
that's
math.
true. Science, technology, something in it, man, mathematics. So I forget what the E stands for. Working on it.
Education, maybe.
E equals
Engineering.
MC.
And
Engineer. That's
and the
right,
last one
Tawana.
is
You back me up.
mathematics. My kids have been involved in STEM. So it's
Yeah.
science, technology, engineering, and mathematics, I believe.
Well, I got 3 out of 4, so 75% is still considered a C,
Absolutely
right? Absolutely. So thank you for Tawana for that
You're
backup. Good
welcome.
looking out.
correct.
All right. Alicia, talk to me. Did you have any comments before we get out of here?
No, this was really good. I really appreciate listening to Living Benefit seminars, presentations, because I feel like I am an
Mm-hmm.
advocate, somebody who would have greatly benefited if I had a policy. I talk about that a lot, me being a breast cancer survivor. And I do like the statistics. I want to start talking about that more when I talk. How 42% of cancer patients lose their life savings and 62% report being in debt. I'm in that percentile.
Yeah.
I had to use my 401k and start over. I had to use all my credit cards and get loans and everything because I was off of work for a whole year. And I know people always
Wow.
make that comment like, oh, if something happened to me, I got my 401k or I got that. But who wants to start over at this age? Like, who wants to take money out of that and have to rebuild that? So that's something that I like to hear and discuss when I'm talking to people. So it was very good information. I like how you went into a lot of real life stories. I appreciate that. Good seminar.
Oh, I appreciate that. You know, she make me all blush. I'm black, so y'all can't tell I'm blushing, but I am. But you did just touch on something that I'd like to comment on it, if I may. So
Mhm.
people talk about I got my 401k. They talk about I got my 401k. They always talk about I got my 401k. I don't want you to challenge people when they say that, but I do want you to remind them. Most people that have 401ks, 403bs, 457, TSPs, IRAs, whatever, they don't monitor them,
Mhm.
right? So you might have got a statement in the mail in January and you think that you got the same amount of money in June or by the end of the year. By that time, something happened. We had an election, we had a recession, a depression, we had a gas main blow somewhere. You know, the economy is fluctuating constantly, and you might think you have 250,000 in your account, but the reality is you don't. Whatever value you have in a qualified plan, and for y'all to understand what a qualified plan is a plan that has not yet been taxed. It's pre-taxed money. So even if the company is matching those funds, the money that you have in that qualified plan is not all yours. So whatever you get whatever you get after the market fluctuation is still subject to taxation. So yeah, you might be able to use your 401k, but is your 401k there? And what's interesting to your point, Alicia, is do you really want to start over when you're already 53 and a half? Right? I can use my 401k if something happens to me. Okay, if something does happen to you and you consume that 401k, another thing is going to happen to you. That's
Mhm.
called retirement. When is it? Because you just consumed your 401k. What are you going to do? Right?
Another
So
thing, if
don't
I can
challenge.
interject, a lot of people
Yes.
don't, most 401ks is a match. So you may have that 250 in your account, but if you take a hardship withdrawal, the company has to take back their match and you get that. So half of that 250 is already lost. So you don't get to get that entire
Oh,
amount. Like you only just get what
mm,
you put in. You don't get what you were matched. So you not only took your money out, but you also lost your company's match. So
you
it's
also
a,
lost the company.
Why
yeah.
is
You know
that
what?
though?
Can you
Because
say that one more time? Because I want to make sure that's clear. One more
so
time.
when you have a hardship and you go in and do a hardship withdrawal, of course they'll approve you. If you have proof that shows that you're going through any type of cancer. Even if I think you can get a hardship withdrawal even with getting a home, but the company matches you and the company takes back their match on a hardship withdrawal. Now, if you get a loan, they'll let you keep the loan, but that's because you're paying it back. But most hardship withdrawals are not paid back. It's because you're like, this is my money. I need my money now. So you're just only going to get what you put in, not what the company matched you. So a lot of your 401ks have a big number because it's your amount and the company's amount together. But once you go in there and get your withdrawal, it's not going to be all of that. It's just going to be half. And then there's even restrictions on you getting that half. So and then when you go back, I was off of work a whole year and dealing with the pandemic and all this or whatever. When I went back to look at what I had, most of it was lost because it was, like you said, fluctuating. So it's something that I would tell people, like, if you don't have to touch it, don't touch it. Get you something else that you can pull from, like,
Right.
find other
What's the reason though
avenues.
for like them not giving you a portion of theirs is because they can't tax it, or like what is like because they're not gaining like an interest of it? I'm sure it has something to do
They're
with them
not
not
getting a
benefiting.
benefit.
Yeah.
Them giving you the match was a benefit to them while it was being invested. You
Yeah.
taking the money out of the hardship is no benefit to them.
Right.
So they want their investment back.
That's what I figured. Okay.
Now, is there a point where you can vest and where that money stays locked in into your account?
Oh yeah, like I mean, you mean like if I don't want to touch it?
But like say they contributed X number of dollars, but because you've been an employee with them for 10, 15, 20 years, even if you were to have a hardship, you'll still be able to keep the vested amount that they gave
No,
you. In,
only
so
on a loan.
you
If
still
it's a
lose.
loan, if you take a
Okay.
loan out, and most loans are not going to be enough. Like I believe the most you can get with my company on the loan is maybe 10,000. But if you take a loan out of your 401k, it's kind of, if you think about it with an IUL, if you do a loan from your IUL, the IUL will
Mhm.
still continue to grow compounded interest because they're thinking that you're going to pay it back. The same thing with the
Right.
401k, but with the 401k, you have to pay it back. Like they'll do withdrawals out of your check to pay that loan back. So
Yes,
it's
I've
it's
seen
a
that.
must. It's a must that you're going to pay it back.
Wow, that's powerful.
And we had
Linda?
said we were going to talk about what happened to me. Are you going to do that on a different call?
What refresh my memory real quick because we still got time.
Okay, because when we were looking at the illustration, when I was looking at the illustration and didn't realize,
Oh, yes. Linda, bring that up, please. And we want to talk about that on this call. Please do.
well, that's the point. I understood the part that the illustration does show that in the first year you can't touch it. Then I was told that
Mhm.
you could, as long as you had money in the account, I guess, that
Okay,
you could
so
access it after that first
okay,
year.
so what I want to reference what she's talking about because Linda and I we had a discussion yesterday about a client that was asking about a loan against their IUL, right? And as you know that if you have cash accumulated in your IUL, there is a certain amount of time before you can actually take that cash accumulation out of your IUL. But there's two different accounts that you're looking at when you're trying to determine how much money that you can get, right? So you see the account value. Do we have a question? We have the account value and we have the surrender value. The account value and the surrender value. The account value is the account that's used to determine or is used to determine what your interest rate is going to be, right? So that's how the interest is calculated, right? But because your account value is X number of dollars, that doesn't mean that's what's available for you to borrow, right? Or withdraw. It's the surrender value that's going to allow you to borrow or withdraw money. Now, when we're doing our illustrations, and for the guests on the line, I know you don't know what the heck I'm talking about, but just bear with me right now since we still got 7 minutes. For the surrender value, you understand that life insurance is a long-term product. If it's something that you're using as an additional retirement income source, whether it be for living benefits, whatever your purposes of the life insurance product, it is considered a long-term product. So to make sure you respect it being a long-term product, you have what are called surrender charges, where if you were to try to extract the accumulated cash from your policy, and to Alicia's point, the company wants to use the money that you're paying into there in additional premium to be able to invest that money. So if you're taking that money out, there's no money for them to invest. So therefore, they're going to give you a penalty for taking that money out. In this case, the penalty would be the surrender charges. So for F&G, National Life Group, and all the other financial organizations, they have a different surrender charge schedule. For the one that we were looking at was with Fidelity and Guaranteed, their surrender charge schedule spans 15 years. The first 10 years, you're being charged 250% of whatever your premiums were, right? Which means it's going to take you a while. I'm sorry, 250% of the target, I should say. It's going to take you a while for you to be able to come out from under that. So if you have a average funded IUL or an underfunded IUL, it's not likely you're ever going to be able to borrow money from that IUL. The only way that you can borrow money from that IUL and have some money available to borrow is if you are overfunding that IUL. But even then, you're going to incur significant surrender charges. So what ends up happening is that first couple of years, right? You can actually borrow money or withdraw money from your account after the first anniversary or first policy year. So if you got your policy issued on January 1st, 2024, you can start withdrawing money from it on January 1st, 2025, as long as you have a money available in your surrender account value, right? Now, if you've only been paying marginal payments, it's probably not going to be a whole lot of money available to you. But if you've been overfunding it, you'll have some more money available to you. But it's important for you to understand that you can take a withdrawal and you can borrow the money after the first policy year, but because it's incurring such hefty financial fees, you might not have a whole lot of money available to you, right? So yeah, I definitely appreciate you sharing that, Linda, because we want to understand where this money is coming from when we're talking to our clients, right? The client says, hey, I want to get this IUL. I want to set up a infinite banking setup. I want to be able to get a trust. They want all these things, but what did Ms. Morris say? Someone went to a presentation and, oh yeah, because I got to get me a car next month. No, it doesn't work like that. Sorry, right? You're talking about a long-term project. Yes, say again.
Are you saying that if somebody do a withdrawal and this is at, let's say, within a 2-year mark, and they have, I don't know, a couple thousand, and they take out 1,500, it could be a possibility that they'll pay 250% of their target market for 10 years? Like that would be just added to their payment?
No, let me see.
That's
I
what I
can't
was
even
looking at.
share the screen because I'm recording. Okay, go ahead, Linda, and I'll reply.
What I was looking at is somebody called in wanting to take out, this was their 3rd year of the policy. I'm looking at the illustration under the surrender charge column, and it shows it showed one amount. The statement, like the annual statement, showed like they had $1,600 in the account. So they call, say they wanted, $1,500. They said, you can't take that amount out. It would be like after 15 years, you could take that amount out. And they were saying, well, I'll give it to my child before then, 15 years down the road. But they were just wanting to take out some money then. And so I'm thinking the illustration is showing in that column before the last death benefit column. I'm thinking that's showing what they can actually access. And no, they cannot access that amount that was in that 3rd year.
15 years though? Why would they say 15 years?
But I guess see, Tony understands it,
Well, allow me to explain it, right?
because they were paying
Go
like
ahead.
target.
Oh, because it
Right.
was under.
And so yeah,
Yeah,
I
it
don't
was
even
under
write people that's
that,
gonna pay minimum. So
Yeah, me either. I
right,
try
right.
not to.
So
target, but they
remember
weren't
what I
paying
said.
a lot over target. Like maybe so you're saying, Tony, if they pay more toward the maximum, then there's a better chance of them being able to actually have some money they can access.
That's exactly what I'm saying. So you understand that there's 3 levels to how you pay into an IUL: underfunded, average funding, overfunding. Underfunded, average funding, overfunding, right? An underfunded is going to lapse, period. We already know that. And average funding will also lapse at a particular year, because remember, the cost of insurance is increasing over those years. But that's later
Yeah, I knew
on
about
down the
that.
line. You don't really have to. Yeah, you don't have to worry about that until later on down the line. And then, of course, they can modify it, right? But only overfunded IULs are protected from any of those problems, right? Including being able to borrow money or withdraw money from that policy. So when you look at the beginning, as soon as they get the policy, the 15 years is the schedule of surrender charges or surrender fees. The surrender fees do not stop until after that 15-year period. So for the first 10 years, the surrender fee is 250%, then 200%, then 100%, 50% on that 14th year. And then after the 15th year, you don't have to worry about paying any surrender charges, which is great, right? Now, she incorrectly spoke when she said that you cannot take any money out, because you can. But just like with if you're under 59 and a half, you can take money from your 401k, 403b, 457. But if you're younger than 59 and a half, you're going to have to worry about that tax penalty, 10%, plus whatever tax rating that you get, depending on what your current tax level is, whether it's 59,000 is 24% or something like that. Same thing happens with your IUL, right? It might not be taxed, but it will be charged, that fee. So, okay, you want to take this money out, knock yourself out. But if you take this money out, this is the money that's available. Whatever is in your surrender schedule, that money is available. But once you try to take it out, once they do the calculation, depending on what year you're trying to take that money out, it might not be cost effective for you to do so. So before you're able to talk to your client about what they can actually take out, you need to take a look at their statement, because their statement will tell you what money is available minus the surrender fee, right? So when you look at the statement, it doesn't matter what year they're in. It doesn't matter what year they're in. So they can be in year 4, they can be in year 12, I don't care. But if you look at their statement, whether it be because they're going to give you the previous year as well as the current year, right? If their statement says that you have $2,500, right, but the surrender fee is $1,500, how much money can you borrow?
Just 1,000.
Because you said it would
Just
be
1,000.
250% of the 2,500 is the surrender fee.
Well, no, not 250% of the 2,500, because I'd have to show you the calculation, and I don't remember it right now. I just know that they will give you the amount of the surrender fee, and then you compare that to the account value that's available, right?
Okay.
So whatever is available minus the surrender fee is what you could actually borrow. Right. So if the surrender fee is $1,500 and you have $2,500 in the account, you can borrow $1,000 or withdraw $1,000. It's going to be in the statements. So when you contact your client, or when you're actually doing an illustration or whatever, you can tell them, hey, when can I borrow the money? You can borrow the money after the first policy year. You cannot tell them when you have the money, because they might not have the money until 7 years down the road. Right. They are eligible to borrow money from their account after the first policy year. That satisfies that question. The next question is, do you have enough money in your account to borrow it from? That's why it's so important that they overfund the policy, because if they're doing a standard funding or if they're doing underfunding, the surrender charges are going to be eating them up for the first 5, 6, 7, 8, 9 years, right? Up to 10 years. And actually up to 15 years, because the surrender fee schedule is for 15 years. That's what she meant to tell you, Linda. All right. So the last year of the surrender schedule, the last year of the surrender schedule, that's for everybody. That's the way it is, right? So the last year of the surrender schedule is 50%. And I apologize, I don't have the calculation on me right now, but I will make sure I get that to you all, so you can, because I want you to understand what that looks like. But whether you knew the calculation or not, if you've ever ran an illustration, you can see it. right? So in fidelity and guarantee, you will see the account value will be X dollars, and the surrender value is never a match to the account value until after year 16. Have you seen that?
Mm-hmm. Yeah.
That's
Right.
why we
So that's where
always
that
show
comes
that
from,
16
right? So
is even.
Mm-hmm. But
Okay.
that's why
all
we
these
always show
years, I
that
did not
16.
know
So,
that because she was looking at it. It had like
but that's
1,600,
okay.
and she got like $25. So she,
Oh, wow.
Yeah, they said
yeah,
26 months. Yeah, but she had keep in mind she was paying $100 into the account, right?
that was the target.
Her cost of insurance, I forget what her cost of insurance was around $40, so she's only putting in $60 a month, right? And for that's 26 months. So that's not a whole lot considering the surrender fee was a lot more than what she had already put in. I think it was 14. I don't want to give people's information, but her surrender fee was pretty high, right? So until you can come out from under that deficit, right? And the same thing happens with the annuities. You might have seen an annuity,
I knew
then they give
about
you
it
this
on.
bonus. So for points, say again.
I knew about it on the annuities, but I just had no idea that there was a surrender charge on the IU
Well,
all the time. I just
yeah.
never knew that.
So what I will do is I will find that segment, and with everybody's permission, I'll send that to you later once I identify it and be able to break it down because I want you to understand that because you're going to be talking to your clients, right? And once you understand it, you can convey it to your clients, and it makes sense because it's a long-term product. Even an annuity, whether you get a single premium immediate annuity or a deferred annuity, it's still a long-term product, right? You still want that money sitting in there. Now, single premium immediate annuities don't incur any of those withdrawal fees because it's intended to be used as an income product, right? But if you got an annuity schedule for 10 years, you got surrender fee schedules for that too for 10 years. If you have a 14-year annuity, you have a surrender schedule for that for 14 years. If it's 7, 3, 5, whatever. You got those multi-year guaranteed annuities, 3, 5, and 7, they still also have surrender periods for them as well, right? So it makes sense that you're going to have that with any kind of an income product or any life insurance product that accumulates cash or has cash in it. They are going to penalize you because remember, they want to use your money to make money. So if you take that money away, you're taking away for them to make money off of your money. They're going to charge you for that. If you keep that in mind, any cash product that you offer from any financial institution, you know that there's going to be some fees involved. As long as you know that, ask about it. If you can't find it, contact one of the agents, one of your senior agents, myself, read, contact it. It's always best to contact the carrier because each carrier is going to have a slightly different situation than another carrier. For example, F&G, their surrender schedule is 15 years. National Life Group, their surrender schedule is 10 years, right? So that's a big difference, right? 5 years is a big difference. So that might weigh into what product that you offer to your client, depending on what that client wants to do with the policy. So if the client, they're not interested in using that money for 10, 15 years, the IUL Gold cannot be beaten. It's the best product that we have, right? And what's cool about that is you can still borrow against it as long as the money is available. And if you don't pay it back, it just gets deducted from your death benefit. And if you do pay it back, fine. It's a wash loan. You never lost anything and you had uninterrupted growth of your money. It's always great. So when we start talking about putting these products inside a trust, it's a little bit more footwork to be done with that, but you can still do it without having to worry about suffering any of those fees, additional fees that you don't have to, right? So right now we have another call at 7 o'clock. Miss Moore, Aisha had to jump off because she's still at work. Miss Moore, if you're available, I think you might be off, but we have our IPO call. Let me tell y'all who Miss Moore is, because I'm really excited about Miss Moore. Right? She don't know this, but I got focus. Right? So Miss Moore, she had a very bad experience being an agent before. So if y'all, the remaining ladies on the call, can do me a favor, can y'all give Miss Moore a big digital hug? And well, there you
Bless
go.
your
It's
heart.
gonna be okay. It's going to be okay. We're gonna take care of you. So my goal for Miss Moore is I would like for her to be a part of the team, but I don't want her to make any decisions on moving forward until she sees exactly who we are. Because y'all know I tell the truth. Tawana sent XOXO. Real talk. That's good stuff right there. Right. A lot of companies do have their similarities, and I cannot say that you're going to see specific entity. But what I can tell you is this team, especially the young ladies that you see, these young ladies, they're out of Houston, and they're actually on this call, Miss Moore, to support me while I try to get back on track with my presentations. And I get some pretty good critiques coming from Linda. I appreciate the comments from you, Alicia, Tawana. You're always, so supportive. But I was missing Azar, because Azar, she just gives it to me straight.
I love it. When you say get back on track, I don't see the off track part. I think it's just a continuous flow, but that's just my opinion. So when you say that, every time you say that, I'll be so confused. Like, well, how does he think he fell off track somewhere? I don't hear it.
That's him.
Miss Moore, now you hear why I keep Miss Tawana on here? That made me feel all good. I'm blushing again. I'm black, so y'all can't see it, but it's happening. If my glasses get shinier, that's because I'm blushing. This is why we need people like that, right? You need people that's going to encourage you, because, and Tawana, and the last thing I'm going to say, I know the mistakes I'm making. Y'all don't, right? And that's the blessing of it. The guests don't know the mistakes. So if you get yourself to the point to where it's time for you to do a presentation, just do it. The guests don't know what you know. They don't know when you trip up. Just make sure whatever mistake you make is not like, oh my God, bad. Like the national deficit is only $1 trillion. No, it's 37. That is something I can figure out instantly, right? But if it's something like, I misinterpreted the account value versus surrender value, that's easy fix. Oh, I'm sorry, I meant the surrender value, right? But the bottom line is, you want to borrow money from your IUL. This is how you do it. I'm sorry I misspoke by saying account value versus surrender value, but this is still the same, because when you contact the financial institution, they're going to tell you what's right anyway, right? So thank you, Tawana. You made me feel all good over here. Did I just start sweating? Did my head get shinier? Right. Oh my God, I feel all good. So
I want you to make sure Azar knows about what I talked about, because
she's coming on right now. So what you got to say, Miss Azar?
Well, you talking about the surrender value versus the account value, and 10-year and 5-year difference between National Life Group and SNG for the fees?
She was paying attention. Oh, yep.
Okay, well,
absolutely. I'm gonna always pay attention to what you're saying.
Well, I just want to make sure.
Okay. So
I'm thinking, well, what's the point of the illustration if it's not showing me something? So what is the illustration showing me?
Well, you know what? Can I there's three things I want to say. I don't like going over. I just want to give y'all the hour and then peace out, because y'all got stuff to do. But y'all always ask these questions that I feel like you need to have the answer to it, right? So there's three things I want to talk about. And this happened in a conversation I had last night with one of our field directors, because the field director did not know how to do so let me tell you how to do a comparison. Most of the time, the answer to your question is actually already on the illustration. And if it's not on the illustration, whenever you're on, I'm sorry, Miss Moore, but you're getting a team meeting right now, so just eat it up. It's all good. This is how this works, right? So whenever you're on the application page, when you're trying to build the actual illustration, a lot of us, we look at the death benefit, we look at the premium, we look at A, B, whatever, and we look at the allocations. But when you go to the index allocations for an IUL, when you scroll down a little bit further, it's going to tell you additional reports that you can add to the illustration. Most people don't even look at that. But those additional reports include the charges and fees, the rates and everything. And a lot of the questions that you have are actually in those reports that you can attach to the illustration. The same thing happens with Fidelity and Guarantee. It happens for National Life Group. It happens for Core Bridge. It happens for all of them. But because we're only locked into making sure that there's a death benefit, there's a premium, there's an increasing or a level payments plan, whatever, when you just get locked into that, you miss a lot of vital information. Now, granted, most of the clients, they don't need to know all this stuff, but you're going to get some people. Remember, this financial education thing is not new because we're doing it. It's starting to get into people's heads and they're starting to ask questions. And as they ask those questions, a lot of those answers are already in the documentation that you have being printed out or any additional reports that you can add to those illustrations. So every now and again, it's a good idea because we don't say again.
I didn't know that, but I was just going to ask, had anybody had an explanation of the charges and expenses pages? I have never had anybody talk to me about it. Period.
How about this?
5 years.
How about we do how about we have a separate team meeting where I just go over the entire illustration and all the because y'all need to know. You might not ever use it, but you need to know because guess what? You know why? Does anybody know why they need to know? Show of hands.
I mean, education purposes to explain to other people, I guess. Now, I do know that they had the additional options at the bottom, but I've always been confused on how to work it. I remember one time I was doing something, we were trying to figure out how to pay into a policy for a certain amount of time and change it over. I was just confused on how to work it. And that's when I noticed that they had all those options at the bottom.
Okay, that's going to be our next training. The main reason why you should know about that stuff is because most of us have IULs. That's why. If you have the product, you might want to know because you're paying into this. You're paying money into a product you don't know anything about. How is that different than people not knowing about their 401ks, 403bs, or 457? It's exactly the same thing. If you a good example, you have. Does anybody know what a monthly, a yearly, and a 2-year point-to-point is? Do you know what that means?
Heard about the point to point, but not I couldn't break it down or know what it is. So
it's in the index, right? In the index strategies. That's what you're saying. Like you're
that's all I know.
Sometimes 2 years, sometimes 1 year. Okay.
Yes. So when can you actually change those?
I was always told that you can change it whenever you like. Now, it might not go into effect until that next calendar year, but you can switch it up whenever, right? Am I wrong on that?
Oh, it was like 30 days.
It's anniversary calendar year. It's not calendar year. It's anniversary year.
Anniversary year.
Right. So if it's a 1 month, you can change it. You can change it, and then it'll go into effect after the month. If it's a 1 year, you can change it after the anniversary of that 1 month. Just lose my signal. Don't do that to me. Still there? Can you hear me?
Yeah.
Okay.
Are you talking about the allocations or what are you
talking
about?
No, I'm talking about the actual indices and on the time when you do the annual reset. So the annual reset is 1 month, 1 year, or 2 years after the policy was in place. Now, you can add your
sorry.
$2,000.
I'm sorry to interrupt, but if I'm going to make the 7 o'clock, I need to leave and recharge my phone. But I definitely will be joining for future meetings.
Nice.
I'm sorry you had to.
Nice to have you.
That agent stuff. But,
I'm sorry.
But I went ahead and I put information to the 7 o'clock in the chat room, and you also have the flyer. I texted to you earlier, so I look forward to you jumping on tonight.
All right.
All right. Thank you, Ms.
Have a good evening.
Okay.
All right.
Okay.
All right. So the long and the short of it is we need a presentation on building illustrations, right? And I'll be honest with you. I've had people show me, and even somebody like Mr. Weathers who wants to show me, but what you got to remember, they're only going to show you what they do. They're not going to show you what they don't do, right? I believe in knowing everything about that illustration generator. I want to know how it works, right? How do I set up a payment schedule? How do I go from option B to option A? How do I determine what payment schedule I want to be able to have for this client? Some of my clients don't want to pay until the policy endows. They might have a specific day that they only want to pay premiums. If they only want to pay premiums to their 65, that's going to change the overall cash accumulation on the account.
That's what
right?
we were doing. That was when we were trying to. It was somebody who only wanted to pay into a child's policy until a certain age, and
that makes total sense. You can set all of that up in the illustration and show that to your client. You can also show them the payout structure, right? Now, what's cool about that, you can do exactly the same thing for annuities. So that sounds like another presentation. I'm totally happy to do that. Like I said, any information I know I'm gonna give you. If I don't have it, I will figure it out. But you can also ask some of the other leaders, but if they don't give you the information that you need, because this is I don't want to pick on anybody, Linda.
You can pick on me because I like to know.
Right. No, but whenever you get fixated on one thing, it makes it difficult for you to absorb something else.
Yeah.
Right. So my goal is to make sure you young ladies don't get fixated on anything. I want you to be like, I need to know this, find it out, move on. Because if you get to a point to where you're fixated on something, another opportunity might miss it, might introduce itself into your life, and you'll miss it because you're too busy looking over there. You know, I need you to know exactly what this is, move on with your life so you can learn something else. And the one thing about it is when they ask you about your weaknesses and your strengths, when we do the field director interview, I'm the person that's not going to worry about your strengths because I'm not a micromanager. As a macro manager, I'm going to go, you know how to do that? Then do it. Okay. What are your weaknesses? X, Y, Z. Then we're going to focus on X, Y, Z until your X, Y, Zs are strengths. And then once they are strengths, I'm going to tell you to do it. And I'm going to move on to the next person. Right. I don't want to spend time checking you on what you say you can do. If you say you can do it, you can do it until you prove to me that you can't. Right? Then we'll do a course correction. But until then, it's just about making sure you understand what the script is, what the plan is, what the system is, and then just follow the system using the strengths that you have. The weaknesses will fix that. So if you're weak at doing illustrations, that's where I'm going to do my focus. So I appreciate y'all jumping on because I appreciate you, Tawana, but I'm not 100% confident about these presentations because I'm so used to ad-libbing in front of people, in front of live audiences, right? It's not as easy to understand what the crowd wants when you're looking at a two-dimensional screen. But when I'm sitting in the room before my presentations even start, I'm literally hanging out with the clients. I told y'all this before. I don't even start my presentation until I've met everybody in that room. And once I meet within reason, because if it's 100 people in the room, I really want that problem. I really want that problem. But if it's 100 people in the room, I can't meet all 100 of them, but I can talk to enough of them to understand who I'm talking to. So when I do the presentation, I know how to do the presentation. These Zoom meetings, I'm going to be talking about living benefits when someone else might only want to talk about IULs. I might be talking about IULs when someone might want to be talking about living benefits. So they want to talk about annuities. I don't know. So I'm literally trying to figure it out as I go during the presentation. And if you just go through a presentation, page by page, that's pretty doggone boring, right? So I got to find a way to get people to interact so I can find out what people want. Then the presentation works well. When you have people like Miss Moore and Miss Aisha and even yourselves who are willing to participate, that's huge for me because it makes it more of a discussion. That's what this is, right? Ask the questions that's going to benefit you, because that same question might be benefiting someone else. Now, I know y'all got to do some bathroom runs. We're over again, but hey, we're doing better every time we do this because now that's only 22 minutes over.
And you can't do this on the next meeting because you said next week is that special meeting on the 18th.
Okay, thank you, Linda. Oh my God, I'm loving you right now because I sure was about to get off without talking about that. So, Azar, are you there?
Yes.
Tawana, are you there?
Yes, I'm here.
Okay. All right, I want y'all to pay attention to this. So next week, I need your help. I am formally asking you all for your assistance. So I have a young lady, she's going to be doing a Medicare seminar for me next week. Why is a Medicare seminar so important right now? I'm going to tell you. Anybody, 100%, I'm going to say this again, 100% of the people interested in Medicare are trying to retire. All of them. Does that mean they have rollover money? I don't know. But if they're trying to retire, retirement means you can afford it, right? At least the last time I checked. So if they can afford to, they might have 457, 403Bs, 401Ks, SEP IRAs, TSPs that they need to roll over. So one of the things I know, to my point that I just made previously, not everybody might be thinking about a rollover. They might not be thinking about annuities. They might not be thinking about IULs. But 100% of the people who are Medicare eligible are thinking about Medicare. All of them. So if they all get on this call,
can't hear.
You can't hear me now? Can you hear me? Did I lose you?
I can hear you.
I can hear you.
Okay, well, it's going to be recorded, so I'm going to send it to you anyway. But if 100% of the people that are going to be on that call are Medicare eligible who are also retiring, then the person that's doing the presentation is already my client. I'm actually her life insurance arm. And she's going to tell all the Medicare professionals or Medicare clients why it's important to have your life insurance set up. They need to hear that, not from me, who's a life insurance salesman. No matter how you boil away the fat, that's what we are. We're marketers, but we're really life insurance salespersons. But if a Medicare professional tells all these baby boomers that you need to make sure that you got your life insurance, your rollovers, your financial situation in order after you retire, that's going to be here. Azra, I don't know why you can't hear, because everyone else says that they can hear right now. So I apologize. But the team will probably
Or
brief
maybe
you after.
check the mute button. Sometimes I press the mute button and it'll.
I can hear now.
Okay.
Okay.
Oh, now I can't hear you.
Yeah, now you can't hear.
Yeah, Tony, you did that on purpose. You know what?
He was being silly for a second.
I wasn't talking about the mic mute button, but it's another mute button on the volume that'll mute out everybody.
He's so silly.
Yeah. It's true. It's true. But I got y'all.
What happened?
I got all of y'all.
He was over here mouthing us.
That was a quick on your feet.
You're going to get it with this guy. So yeah, I really would appreciate if you can contact all your mid-60s. Okay, so we're going to be having a Medicare presentation next week, right? So all the people that are Medicare eligible that you might know, get them on that call, because that's an opportunity for us to make sure we can get some of that rollover money when they retire.
What's the age limit for that? Is it the 59?
It's 65.
65.
But if they're still working, they can go over 65. But once they get ready to retire, they have to remember, this is a law. They have to get Medicare.
Yeah, they have to.
They have to. So because they have to, they're going to be paying attention to us doing a Medicare seminar. So if we're going to be doing a Medicare seminar, the person doing the seminar is going to tell them why it's important for them to make sure they roll over their money, make sure their money is right. And of course, you're going to have a call full of financial professionals that's there to assist them. So it'll make it easier for each of you to talk to them about those rollovers, those life insurance policies, anything that they might have, especially if they only have life insurance with the company that they're with. Because you understand that if they retire and they don't have any private insurance, they no longer have insurance, and that makes them susceptible to losing money. That's as we're coming back. That makes them susceptible to losing their money if they have a medical condition that ends up using up all of their retirement funds. That is a very important conversation that we need to have. So I am formally asking each of you to get as many people that you can that's around that age, 64, 65, 66, get them on that call and let my friend Reagan pretty much close those people for me. How about that? We got Sabrina Swan coming on. All right. I got everybody on my team is sick. So Linda's a better leader than me. Her whole team shows up in droves, right? So did anybody have, okay, hi, Sabrina. Thank everybody.
Fantastic.
Hi.
What?
Hello.
I'm kidding.
I know I'm tardy for the party, but I'm here.
That's all right.
Hey.
Well, welcome. I'll make sure you all get the link to this presentation tonight because Ms. Sabrina, I really want you to be able to listen to what we discussed this evening. But does anybody have any questions for now?
No, thank you.
All right. So we're actually getting really closer to actually doing this in an hour. I'm excited. It's great. Right. So I do want to have that Linda, do me a favor, poll I guess we can poll now, but figure out when you all would like to have that training on illustrations, and we'll just make it work. Y'all, and make it quick because y'all got to. Tawana, Azure, Linda, all three of y'all in major league, so you might want to do this pretty fast, right? If it's only the three of you, that's fine. But we got to get y'all need to understand this preferably before the weekend. So I will make time for you. I don't care what time it is. Y'all know I don't sleep anyway. So just let me know.
Valentine's Day coming up on Friday.
Well, I know Tawana got a boo. He was pretty tall, but I can't say that about everybody else.
That is my agent and friend. It is not my boo. No rumors that is incorrect. Miss Linda was swaying up and down. That was my boo.
I did not never say that. But he saw the pictures with him on there standing by.
Well,
everybody like him.
There's two kind of smiles. There's that smile when you're taking pictures by yourself, and there's that smile that when you're taking a picture with your boo.
Again, everybody does like me
because
I'm likable and lovable. So hey, that's just that blessing. The blessing that
I'll grant you that. I grant you that you're likable and lovable, and we don't expect to hear from you on Valentine's Day.
I do. I am actually available with me and my broken ankle. Will be here, and I can take a meeting on Friday. I don't plan on doing anything. I do expect people to maybe deliver me some food. However,
that was a hint. That was a hint. I like how she threw that in. That's good stuff. All right. So y'all tell me because y'all know. I'm sorry. I don't. Even if I had a boo, I'd still schedule. That's probably why I'm single because I would still work on Valentine's Day. I'm sorry. It's true.
Well, I'm going to see a play on Friday.
Has Linda got the boo?
We could just.
I never do nothing fun.
Miss Linda got
so
the boo.
You should do it. Enjoy yourself.
Yeah,
it's okay.
Alicia's
maybe,
I'm sorry.
Can we do it maybe like Sunday or no, Sunday's a bad day for people.
No, I
Sundays.
I work, so that's Sunday evening.
Oh yeah, so I want to go to work.
As long as it's not during church hours. As long as it's not during church hours, I'm good. How about that?
I'll be working.
So my church hours are done by 3 o'clock. By 3 o'clock your time, I'm available.
How about Friday morning? Oh,
I'm sorry.
You're probably not be available Friday morning. Yeah. I'm off on Fridays and Saturdays.
Oh no, not Friday morning.
Yeah.
I can also do multiple presentations. I can do multiple presentations. All of you don't have to be on the same one.
Okay.
Okay.
It'll take about how long? 30 minutes, 45 minutes, an hour?
30 minutes.
Say about an hour with us. I can see.
Well, y'all ask questions. I love those questions. So if it's just 60 minutes, but in that 60 minutes, remember what I said. If you don't know, you don't know. But if you know, I'm going to hold you accountable for knowing it. Right? So ask the questions that you can. If you still don't know, then we'll keep doing it until you get it. But once you get it, I'm going to be like, okay, Alicia, I can't do this time. Can you go ahead and teach Azure? Right? Mm-hmm. That's where that comes from. But right now, I'm going to assume y'all know nothing. So I'm going to treat y'all like y'all don't know a thing about it. Right? And then we're going to go over it. And we can set up we can set up Friday morning, and we can set up Sunday afternoon. Y'all can attend one, or you can attend both. How about that? Can we do that?
Yes.
Okay.
I can
do me a
Friday.
favor and tell me Friday morning what time.
What time?
I'm free. I'm off
Alicia,
that.
you
day, so
gotta
don't
give me
matter.
that write-up too, right? You working on that?
Okay,
Oh
Linda's
yeah,
gonna
I'm
send
still working on that, Linda. I'm gonna have it tomorrow for sure. I'm gonna give it to you.
Friday morning, I might can sneak on because we don't have the kids in school, but I'll be in professional development, so I might can but I won't be able to talk.
Like 9 o'clock.
What's morning to you? 9 o'clock your time?
Oh,
But
well,
he's
that's
on the
definitely
West Coast,
time.
so
Oh, so we can do 10
Don't worry
if you
about me.
want.
Don't worry about me because I like early. Early's good, right?
okay.
I get up at 4 or 5 o'clock in the morning, so early for me is good,
Yeah, I'm up
right?
that time.
So
And
yeah, if we can do it at 9 o'clock, 8 o'clock, whatever works for you. Because remember, it's an hour. We're going to be on maximum, Alicia, maximum.
Yeah, I want to
the
do
other,
what,
All
10?
right.
the other thing, Tony, you wanted me to ask somebody is why their people fell off.
Yes, I was going to get to that, but I think, you know what?
Let's talk about that
I was
Friday.
trying to get y'all off of
That's
that.
gonna be a 30-minute conversation.
Yeah,
We gotta get
yeah.
ready for the next meeting. I gotta
Yeah,
give my
be
people
a
room.
long
Yeah,
conversation.
It's gonna be a
you
long
want y'all ready for that? Because I really want to know that answer. I really
Put a
want to
pin
know
in it.
because we want to fix that. So,
Yeah.
Yeah, like
but
someone
I'm
said, put a
hey,
pin
I
in
like pin.
it.
Pin in it.
All right, so I know. Are we doing 9 o'clock Central Friday morning?
10 o'clock.
Let's do 10 o'clock.
Let's do 10.
10 o'clock Friday morning. Okay, and then when are we doing it on Sunday afternoon?
I'm good Friday. You don't have to do it twice.
Yeah.
I got Alicia, I got Tawana, I got Linda. She got a boo.
Linda,
Azure,
Linda,
are you
talk to your boo
available?
during
Friday,
lunchtime.
Friday.
Friday,
Friday,
10 in
10
the morning.
a.m.
How early is
Friday,
you
10
gonna be with your boo,
a.m.
Miss
I
Linda?
can do 10 a.m. Seems
Wait
like
a
I
minute,
gave some.
I shouldn't be recording that about your boo. I shouldn't be recording. Let me stop that recording.